JSE All Share Index has extended losses for the third straight session on Friday, trading around the 64,680 level. That's in line with global peers amid concerns about the effects of higher interest rates on the global economy. Let's speak to Roy Mutooni now. He's an analyst with ABSA Asset Management. Roy, welcome back to Daytime Update. Always great to have you on. First things first, give us an overview of the broader market performance this Friday when you look at that post-rate decision announcement locally and in the US.
So we've seen the local markets follow the global markets last night down. I mean, the all shares probably down about 1.6, 1.7%. The top 40 is down just under 2% as well, and there's very little that's positive. I think the sentiment is just negative out there. The rand is weaker, the dollar is stronger, yields are higher. I think it's just going to be a difficult short to medium term for equity markets in particular.
Denal says it needs around 3 billion rand. That's to cover a funding gap for restructuring plans that it aims to execute in the next 12 to 18 months or so. How do they plan to actually raise that money? It's not a small sum.
No, it isn't. And this isn't the first time. I think they've already had one failed restructuring. They're talking about selling non-core assets, realizing some working capital, and that sort of thing. But the reality is they just need to get into the queue behind ESCOM and the post office and all of those other people who need government funding. I mean, the one positive that they have is they have a solid order book of something like 3 or 4 billion over the next 3 or 4 years, which they could execute on if they were able to run their business, if they could get this working capital. But no, it's really dark times for anyone who needs funding from government or outside of their own sources. So it will be interesting to see how they resolve that, because they were perilously close to liquidation only 6-12 months ago.
Let's chat a bit about Investec Group's pre-closing trading update and the trading statement. What have we been able to glean from it as far as their performance is concerned?
So this was actually a good update, and I think it was ahead of where the market was expecting. So they think they're going to get operating earnings at somewhere in the region of about 400 million British pounds, and that they're going to earn return on equity, so return on the assets that they invest, somewhere between 12 and 16%, which is around their 2024 target. So they're getting that at least a couple of years early. And all of this is on the back of improved profitability. They've had good customer growth. The high interest rates have helped them as they would any bank, and they've managed their costs incredibly well. So I think it's quite positive, and even when you look at the share price, they're flat. At least they're not down like the rest of the market.
Texan Property Fund, they've also got annual results out and a cash dividend. How well have they done?
Quite poorly, to be honest, but in the context of where they operate and in the company that they keep, I would say it's probably acceptable. So this is a global property REIT. They have investments in the UK and in SA. So what they saw was property revenue down about 25% on account of lower leases and lower reversions. Their HEPS were down 60% and the dividends down about 55%. But on the positive, their loan to value is still at about 38%, which is reasonable in the context of where they've come from and where their competitors come from. So at least shareholders get a little bit of a dividend, but it's still very difficult times. What they've done in the interim is they're able to reshuffle some of their assets, sell away some things that they didn't want, and buy some unlisted stuff that they wanted. Maybe they start making progress within the next year or so.
Roy Mutooni, when your dividend comes in, you give me a call. Thank you very much for speaking to us as always.